Got $1,000? Here are two magnificent artificial intelligence stocks, both down 15%, that you can buy on the dip. Welcome to US Equity Lab. Today, we are looking at a rare opportunity. Two magnificent AI stocks have recently pulled back 15% or more from their all-time highs. If you have $1,000 ready to deploy, these dips offer a compelling entry point into companies that are quite literally building the future of AI infrastructure. So let's dive into why Alphabet and Broadcom are two of the best AI investments you can make right now. First up, Alphabet, the AI giant hiding in plain sight. Alphabet stock is currently down more than 15% from its recent highs. But that price action masks a company that is executing flawlessly on its AI strategy. Alphabet is integrating AI across its entire ecosystem, including its massive Google search engine. But the real standout is its cloud infrastructure. It supplies the computing backbone for other businesses to run AI workloads. And in the second quarter, Alphabet's cloud division delivered explosive 82% growth. Overall, the company's second quarter revenue surged 24% year over year. Even better, Alphabet is becoming more efficient as it scales. Operating margins expanded from 32.4% last year to 34% this year. Now here is an interesting twist. Alphabet is sitting on a massive paper gain from an early investment in SpaceX. Once the lockup period ends, liquidating that stake could deliver a huge cash injection, funding even more data center construction, without ever touching its core cash flows. To value Alphabet, you look past those SpaceX paper profits and focus on its core operating profits. By that metric, the stock trades at a highly reasonable price. Analysts project 24% revenue growth this year and 22% next year, well off its highs and easily outpacing the market. This is a phenomenal stock to grab at a discount. Next, Broadcom, the custom AI chip powerhouse. While NVIDIA grabs most of the attention, Broadcom is quietly emerging as an AI powerhouse of its own, and its shares have pulled back about 20% from their all-time highs. That is a fantastic buying opportunity. Instead of competing with NVIDIA in broad graphics chips, Broadcom took a different, highly lucrative route. It partners directly with AI hyperscalers to build custom chips. The most famous example is its work with Alphabet on the Tensor Processing Unit, the TPU. These chips are so efficient that Alphabet now sells them to other companies, driving Broadcom's bottom line. And the results are staggering. Broadcom's AI semiconductor division grew a blistering 143% year over year, bringing in $10.8 billion in a single quarter. Looking ahead to 2027, management expects this one division to generate over $100 billion in revenue. And yet, despite these massive numbers, the stock stays attractively priced. Factor in next year's growth, and Broadcom trades for less than 20 times forward earnings. Wall Street forecasts 66% revenue growth this year and 63% next year. A tech giant growing over 60% for a PE under 20 is a rare find. The market doesn't hand out gifts very often, but the pullbacks in Alphabet and Broadcom look exactly like that. Alphabet with its booming cloud, and Broadcom with its custom AI chips. Both possess the catalysts to push their shares back to new all-time highs before 2026 is over. So for investors with $1,000 looking to add high-quality, high-growth AI exposure, buying the dip on these two titans is a move that offers serious long-term upside. Thanks for joining us at US Equity Lab.